Morning everyone. Welcome to Ecoholics YouTube channel. My name is Avinash Agarwal and in this video I'll be discussing with you important current affairs for 29th May 2024. There are three very good, very nice, very important articles, very analytical articles that I found in the mint today for you. All these three articles are having a common theme running through them. Number one is about clean energy. How is it that we should go about generating clean energy? Who will put in the money? Why will the private sector put in money when it isn't exactly profitable? If it isn't exactly profitable, then how should you go ahead and finance these kinds of important projects that are really, really important if we want to meet our net zero targets, if we want to keep, temperature within 1.5 degrees centigrade of, pre-industrial era average. So how do you go about financing this? Secondly, what is the role of state? Can the state replace the private sector completely and go about financing this kind of transition? Or is the state involved and it has to enable the private sector to be able to do this transition? These are some very complex questions. And thankfully, all these three articles put together will be able to answer some of these complicated questions. Typically, in any examination, you get asked this question that what's happening so far as state PSUs are concerned or central PSUs are concerned. What is their future for public sector units? What is the future for, let us say, state-led industrialization, right? And if you take a one-sided answer that the PSUs should be dismantled, your answer will not be well rewarded. If you take a one-sided answer that PSUs are fantastic, they have been doing the heavy lifting, your answer would not be very well rewarded. You have to be able to give a very nuanced answer. And that is what this particular set of articles is going to help you do. They will help you develop that nuanced understanding of PSUs and their important role going ahead, and the importance of, let's say, private sector, and how you should involve the private sector in difficult projects. So those are the kind of things that will get answered out of this discussion. I hope I'm audible and visible clearly enough to all of you guys, right? So let us start the discussion. So first things first, right? What is happening in India is that there is a little bit of a buyer's market that is getting created. What do I mean by buyer's market? That there are a lot of clean energy assets on the block. People are willing to or wanting to get out of the sector. They want to sell off their clean energy assets and they want to probably move on to something else, right? Maybe within the same space or otherwise, whatever may be the case. So buyer's market is emerging in the sense that since a lot of people are wanting to sell their clean energy assets, clean energy generators, clean energy plants, right? So getting a good price for these assets may be slightly difficult given the kind of market conditions that we are in, right? So for instance, Siemens, for instance, Shell, right? They are basically coming out of a variety of sectors. Like for instance, Siemens Energy, it is looking to sell the wind turbines unit. Shell is looking for investors in spring energy, right? Similarly, Renew, it is in talks, it wants to, kind of bundle out its solar assets. So these are your three examples that you can probably, take note of. So essentially what you see over here is that there is an oversupply of clean energy assets, clean energy generating power plants, and therefore getting a decent price for them in this market condition may be slightly difficult. And your ability to close the sales for these assets, it may critically depend upon the viability of your project. Is your project viable enough? What kind of gap is there, let's say, between your cost of generating power and, let us say, the market price available in the market, right? So all of those questions need to be answered very carefully. If you see, India is India is progressing well so far as moving towards 2030 target of generating 500 gigawatts of energy from renewables. So every year we need to add 50 gigawatt of renewable energy capacity. In 23-24 we ended up adding 69 gigawatts of capacity. So in that sense we are doing well for ourselves, right? A lot of guys have created this business model that they set up, let us say, clean energy assets, and then they sell them off, and then set up and then sell them off, right? So that is good so long as you are able to sell it off and make a profit for yourself. If you are not able to do that, then probably you stop doing the first thing, which is set up, because if you cannot sell off and get out profitably, then it doesn't make any sense for you. So that is where we need to be slightly worried that this market is basically seeing maybe an oversupply of a lot of these clean energy assets which were created with the motive of selling them off profitably, right? If you see India's overall power situation, so this part of the article has given you a sense of what's happening in this part of the market. Now looking at the larger energy sector in India, right? So we have 418 gigawatt of power production capacity. 237 gigawatt is in thermal plants, 47 gigawatts is from hydroelectricity, and 110 gigawatts is coming from windmills and solar. Please note down these numbers, they are very important numbers, right? These kinds of statistics you should be able to have on your fingertips, because if you don't have it, then you will not be able to cite it, right? We have already spoken about the fact that in summer seasons there is an over reliance upon thermal power, because your peak demand is at a very high level. Solar and wind, they cannot really plug in to the grid, or they cannot really take care of this excess demand. So there is an over reliance upon your thermal power plants, which are not exactly the cleanest sources of energy in the world, right? So we tend to talk a lot about coal supplies in these summer months. Last year our peak demand was 221 gigawatts. This year our peak demand is likely to be 240 gigawatts. So there is a lot of pressure upon coal wagons, upon thermal power plants. Old inefficient power plants have been revived. All the plants have been asked to work at full capacity, right? So broadly speaking, if you look at the scenario now, right, we are trying to decarbonize our facilities, right? But those decarbonized facilities, they are either off grid, or they are not able to take care of the supply gap, especially at night time. So during daytime, solar power can definitely plug in, but at night solar power becomes difficult. They are not able to be an individual contributor, so to speak, in my language, right? Another problem that has been mentioned over here is that your power discom, power distribution companies, which are owned by, let us say, state governments, they have been reformed in the last 7 to 8 years. Government has been taking a lot of steps, but still they don't charge users enough to profitably pay the power suppliers. If I am a distribution company, I purchase power and I sell power. I purchase power from generators and I sell power to consumers. Consumers can be houses, they can be industries, they can be farms. If I'm not charging enough prices from houses, from firms and from farms, then I will not be able to pay the supplier of electricity, right? I will not be able to do that. So the idea being that these discoms, they need to do better for themselves, right? Reform attempts in the general power sector have been rolled out, but still price signals are weak. Still power subsidies is a very important talking point in any election that we come across, and the distribution grid that we have is not the strongest, is not the most modern, is not what we want it to be for, let us say, a Viksit Bharat kind of a scenario, right? So far as solar and wind is concerned, like I said, that we need to be able to store this power for use during deficient times, right, or times of high demand. But storing solar and wind power is going to be extremely costly as of now. So battery costs need to come down, but that is going to take its own sweet time, right? So like I said, that storage is costly, right? And definitely we are not quitting coal-fired power plant anytime soon. We are very clear on that, and nobody is really expecting us to do that, right? Now, when you talk about private players and what role they will play, right? So they need subsidy support. They need state purchase mandate for their projects to become viable. Otherwise, if you set up a wind or a turbine facility, you will not be able to have profitability at a unit economics level all by yourself. You will require support, right? And therefore, if that is the reality, then state has no option but to play a bigger role. State can directly put up these facilities. State can enable private sector to put up these facilities, but state has to be there. Another very important development that can be done is that we can create a genuinely working carbon market in India, in the sense that if, let us say, I am putting up a clean energy facility which is saving carbon and therefore is earning carbon credits for me, then I should be able to meaningfully sell those carbon credits in a market and get some amount of money which will help in plugging the viability gap in my projects. So that carbon market really needs to take off, not just in India but across the world, right? So this carbon pricing becomes therefore very important. Now this is a very balanced, a very nuanced view of what's happening in India, right? So the first part of the article talked about, what's happening, let us say, in the clean energy market, right? And the second part of the article kind of spoke about what is the present scenario and what really needs to be done so that we can decarbonize the way we want to decarbonize, right? Now let me take a completely one-sided view. Okay, I'll take a completely one-sided view. Now this article has been written by no less than Chief Economic Advisor of Government of India. Okay, so it's a very beautiful article in a way, right? It's a very well reasoned, very well argued article, and it kind of tells you that like the title suggests, that why only the public sector can save the world and should occupy commanding heights of the economy. Now, just to add a little bit of a narrative over here, right? This is the kind of article which is coming out from Chief Economic Advisor, Government of India, presently, right? Not some former Chief Economic Advisor 20 or 30 years ago, please, right? So this idea that Nehruvian economics did not work, or PSUs were not working, or this was not working, or that was not working, just keep this particular article in mind whenever you come across this narrative, right? Because oftentimes what happens is that if you get swayed away by narratives and take a one-sided view in an examination, you can hurt your own chances, right? So you have to be balanced in your approach. This is a beautiful article. So in a recent article written in October, and I'll try to bring this article for you guys going ahead, right? So the author suggested that nations, they would be ill-advised if they were relying completely on private capital in dealing with climate change, right? We cannot completely rely on private capital. Now further evidence, further proof of the same has been presented by Brett Christophers. Brett Christophers has come out with his book, The Price is Wrong, Why Capitalism Won't Save the Planet, right? And in this book, Brett Christophers basically elaborates upon this point furthermore, right? That while private capital may have a lot of potential, there may be a lot of money swimming around, but it will not invest enough in these kinds of projects, right? And your Western nations, they shouldn't be really debating this idea that they have to finance transition in the developing world. That is what Christophers say, or that is what Christophers quotes in his book. That he says that there is no question, given the fact that countries such as, let us say, US, Canada, Western European countries, maybe even Australia, New Zealand, right? All of these countries became developed countries on the back of carbon emissions, which they have been doing since, let us say, 100, 150, 200 years, depending upon which country you're talking about. Definitely, they are the ones who therefore have benefited and therefore need to help others, adapt and mitigate to the, requirements of climate change, right? So there is no debate, but there is still a debate. Christophers doesn't blame India and China for, having, let us say, fossil fuel power plants. And in fact, he also acknowledges the positive steps taken by both these countries in terms of creating substantial renewable capacities. Now, coming to the core question, right? What is the role of private capital, and will it be adequate or will it be sufficient in tackling this problem of climate change? Answer is a clear no right now, right? Answer is a clear no. When is the answer yes? When will private capital be invested? When there is, let us say, good prices available in the market for your power, when there is good profit available for your investments, therefore you are able to get a decent ROI. That is when private sector will wholeheartedly, on its own, voluntarily come into the market, get invested and get deployed. Given the fact that prices in the market are, not such that you can ensure your own profitability on your own, private capital doesn't have the incentive right now, right? And the author goes on to say that whenever state support, and this is very important, whenever state support, whether it is in the form of subsidies or in the form of guarantees or in the form of land concession or in the form of tax reliefs, whenever state support has been withdrawn, investment in additional renewable, additional clean capacities has come down, right? So country after country has witnessed this, right? Government after government has gone down this road and they have witnessed this, right? So the key problem over here is that unit economics is not so favorable for renewables all on its own, right? They are much less energy dense. You need huge areas, huge capacities, etc. to be able to generate units of power, which otherwise a thermal power plant can throw out in a very small space using a very tried and tested kind of an approach, right? So it's all about profit at the end of the day, right? And again, the ultimate conclusion is that, sometimes we have this tendency to say that, there are certain manipulators, there are certain sharks, there are certain riggers, there are certain, immoral characters who are not helping pricing become right, not helping the market to function efficiently. All of those arguments don't work. Ultimately, what matters at the end of the day is the money on the table, right? Private capital is looking for profit. If there is profit to be made, they will come. If the profit is not there, they will not come, right? Now, calling a renewable energy market a market is in itself a joke, because the authors say that this renewable energy market, or let us say electricity market, it is not really a market, right? There are constant changes in regulations. It is a highly over-regulated market. In fact, authors point out that this is a bureaucratic thicket. It is not a market at all, right? So in that sense, it's very, very complex place. They have given this very beautiful example about Europe. They say that in a liberalized market for electricity, such as in Europe, renewable energy developers, they take all possible steps to avoid selling at the market price. In countries where market determined, so the demand, supply, price, etc., is the be all and end all of everything. In those countries, renewable energy developers, they don't want to sell at market price, right? This is exactly what the authors believe is the negation of market mechanism, right? So to believe that, private capital is ready, private capital is available, private capital is waiting to enter into your country and establish fantastic renewable energy capacity, all that is just BS. It's not going to happen. It's not going to happen, right? What's happening over here is that the moment you start relying upon the private sector and the private sector will not invest, then what the developed countries will do is that they will start blaming the developing countries. They will blame the developing countries that you are not attractive enough, you are not open enough, you are not friendly enough, you are not easy enough, right? So all these things will start, right? And given the fact that in developing countries interest costs are higher, etc., so it's going to be a long time before these projects actually become profitable. So then the question arises again, that who needs to be taking the commanding heights of the economy, right? And the answer comes out in at least this particular article is that public ownership has to be extensive. Involvement of the state has to be extensive. It's not just about assuring the private sector certain return on investment. It's not just about de-risking private capital. It's about, getting involved into the thick and thin of it, right? So state-owned generation and distribution companies, right, they were not economically viable, right? So what did we do? We unbundled generation, distribution, involved the private sector to a certain extent, right? Now if the state, it took up the ownership of renewable energy assets, right, will we come back to the same problem, right? What about investment accountability? What about production efficiency? What about financial accountability, right? So the author says, therefore, that if energy transition is to be attempted, involvement of the public sector is a sine qua non. But answering these questions and taking care of these problems that we encountered in the past is also equally important. And therefore, we must face these questions today, that how can we have a public sector 2.0, right, come into place, which will actually deliver upon the goods and services required, even while not having the problems of the previous public sector avatars that were there in India, right? So you can see that from the first article, I have built up in a particular direction in the second article, right? Now I'll discuss a third article with you, which will give you a completely diametrically opposite picture of the scenario that we have discussed so far, right? That what's not happening right in the PSUs is something what will be the main premise of the third article be, right? So let's start this particular discussion. If there is any doubts that you all are having, you all can feel free to ask the same to me, right? So moving ahead, right? So India's state sector is thriving, but is not helping the economy. So what is the author going to talk about? I am going to summarize a lot of that content right now before I actually start discussing it. So the author will say that the stock market performance, etc., of a lot of public sector units has been really fantastic. We have been beating the broader Nifty in terms of return on money invested, etc. Right. So all that is real good. And Prime Minister Modi, when he was Chief Minister Modi, has done something similar with Gujarat-based state PSUs. Right. He was able to turn them around. Right. So definitely they are thriving. Definitely, they are performing well right now, right? But if you do a more deeper analysis of what's really happening, then the picture isn't exactly that rosy, is what this article is going to talk about. Okay, so when Modi won the 2014 election, so one of the very famous statements that was also asked in a variety of examinations was around this, that Prime Minister Modi said that I believe government has no business to do business. And I'm reasonably sure that you probably remember that one of the catchphrase of Modi's coming to power in 2014 was minimum government, maximum governance, right? That I'm going to cut down upon, let us say, bureaucratic interference. I'm going to cut down upon the size of bureaucracy. I'm going to cut down upon the red tapeism, etc. And I'm going to ensure that results deliver themselves, right? Now, this is very close to laissez-faire. This is very close to Margaret Thatcher kind of an approach, relying upon the private sector, enabling the private sector, and so on, right? But if you look at the track record of Chief Minister of Gujarat, right, then you will see that as Chief Minister of Gujarat, one of his proudest achievement was that he was able to turn around the public sector companies. And they never bundled it off. They never sold it off. They turned it around. They made them profitable, right? So, and if you look at the recent interviews that Prime Minister Modi has given, he has repeatedly spoken about the stock market. He has repeatedly spoken about the stock prices of public sector companies and how they have performed fantastically well. In fact, I haven't seen this or heard this ever before, but Prime Minister and Home Minister of country asking people that invest in the stock market, whatever you want to invest, because once the election results are announced, the stock market is going to be through the roof, right? So that's about that. We can discuss that on a separate day, right? How advisable or unadvisable these statements are. But the point over here is that stock prices of public sector companies have been performing really, really well, right? They have been trading at a premium. If you ask the government officials what is working, right? So a lot of them will say that this is a new era of governance. There is professionalism, there is strategic foresight, and there is commitment to national interests. So there is a lot of optimism, right, in these kinds of assessments, right? But let us dig deep into these assessments a little bit, right? So if you see India's state-owned enterprises, they are largely operating in fossil fuel, transportation, and 20th century capital goods, right? These are all very sunsetty kind of industries. They are not going to probably be there in the 22nd century in a very big way. Now, you may laugh at me, I'm talking about 22nd century, but yeah, you have to start thinking about the latter half of the 21st century. What is your place going to be in that part? And what is it that you are aiming for going ahead in the 22nd century, right? So most of these industries are therefore going to be outdated, right? And if you look at private sector investment in India, that has been weak, right? And when you add all of these things together, you realize that something is missing over here, right? So public sector undertakings may be doing well, but they are mostly monopolies in sunset kind of industries. Is that really, a fantastic thing? If you ask guys at Kotak Institutional Securities, so they say that a lot of these PSUs, they are having strong cash flows and they're reinvesting those cash flows into their existing businesses, right? So what about future-proof businesses? What about long-term viability? What about transitions? Who is going to fund that, right? So that is going to be a little bit of a struggle that we need to kind of get out of, right? If you look at private investments, so private investments have shrunk by over 15% in 23-24. If you look at manufacturing, right? So fresh proposals, they fell by 40%, right? So from 20 trillion or $240 billion to 12 trillion or $144 billion, that is a kind of decline that has happened. These are the kind of numbers that you should always try to note down, right? These are the kind of numbers that you should be able to cite in your answers, right? So that's the whole point over here. So then the question arises that why is it that private investment is not coming in, Is it not profitable enough? Is the business environment not good enough? Have the reforms not been broad and deep enough? Answer can be a combination of all of these factors, and that is what the author is trying to say. That if you look at Prime Minister Modi's battle plan for economic growth, it is not depending so much upon the private sector. It is depending upon the public sector. And public sector gets money when government borrows, or public sector, when they mop up money for investments, they leave less available for other sectors. How long can you do that? I mean, for instance, the author says that the government expenditure as a share of GDP has been continuously going up. So while capital expenditure going up is a very good thing, revenue expenditure remaining contained is a very good thing. But how long can you be on this path where public sector is leading the charge, right? Ultimately, there is going to be coming an endpoint for this, and when that endpoint comes, what then, right? So maybe the argument can be that we are building out infrastructure, we are going to crowd in investments, etc. So that can be an argument, but you should be able to make that argument in the examination, is what I'm trying to tell you, right? I'm just trying to show you all sides of the coin. I'm trying to show you a 360-degree view of the coin, so to speak, right? So we are expecting a growth of 7.1 to 7.4% in the year coming ahead, and again public sector is going to play a very important role. Now, when you see that in 2014 Prime Minister Modi says minimum government, maximum governance, when you see that in 2014 Prime Minister Modi says that the government has no business to be in business, so you see some of that actually getting reflected in his policies. Like for instance, we sell off Air India, we try to sell off or disinvest BPCL, but don't end up doing that. We try to involve the private sector in the farm value chain, but eventually have to roll back the plan of action. So it isn't as if that we don't want to do that, right? But it has been so damn difficult to do it. Whereas relying upon, let's say, PSUs and nurturing PSUs and nurturing them towards profitability is a far more easier poison to swallow, right? So definitely the approach is not exactly that of laissez-faire, not exactly a Thatcherite approach, right? If we really want to modernize our economy, right, then we need to start investing away from the sunset industries. And maybe the PSUs, with their cash flows, with their government backing, etc., can probably play an important role over here, right? Government investments, they have to go in the right direction, right? You cannot have state-owned companies, right, following New Delhi's diktat and investing in their existing businesses in a very heavy manner, right? That is not the solution, right? Stock market performance of PSUs is not a reflection of future readiness of your economy or future readiness of your industries, right? So that's the kind of conclusion that is coming out. So you see that all these three articles, they were very closely aligned to a particular theme, and that theme was essentially around, let's say, the role of state enterprises, role of PSUs, role of government, right? And simultaneously there was a good dash of climate change and renewable energy, etc., that we are speaking about, that these assets need to be developed, but who is exactly going to develop these assets? Who can develop these assets? How can these assets be developed? Why should state play an important role in the development and management of these assets? So I hope that this has been an enlightening and an eye-opening kind of a discussion for you guys. Available on our app, Ecoholics app. You can download the content from there and make sure that you read it and make sure that you note down all this content that I've discussed in less than 200 words. Just keep doing that and you will be on the right track. Okay. So I'll bring this session to an end. As always, it has been fantastic discussing with you guys, right? And Aniket has a question, sir, how to connect with you? RBI exam, ESI plus GA for phase 1 will be completed. Referring this series, please mention your Telegram ID channel name, right? So Aniket, please leave all of these comments in the comment section after the video ends, and my team will share the links, etc., with you. Speaking about the RBI exam, ESI plus GA, so please remember that this discussion will be very helpful, especially for ESI, right? Especially for long answers in ESI and especially for your interviews. Okay, you will require a certain amount of supplementary reading to do so far as general awareness is concerned, because typically what happens in general awareness is that they ask you a variety of different questions, right, which are like very current affairs, very GK general awareness kind of a question, that what's happening with this, what's happening with that, and so on, right? So a current affairs magazine which covers the entire spectrum of current affairs will be very helpful over here. This discussion that I keep doing over here on economics, it will be super helpful in essays, it will be super helpful in ESIs, it will be super helpful maybe in some questions related to finance, and it will be super helpful because when you go with so much knowledge, with so much insight, with so much analysis into the interview, then you are a very attractive candidate, so to speak, right? So just keep that in mind, right? And like I mentioned to you, if you want to connect with, let's say if you want to connect with us, again, just drop a mail on Ecoholics email ID and they will help you do the needful, right? And all the links that you're looking for, they will be available in the comment section. And Aniket, I don't know whether you know this and or not, but this is like, I started this exercise on 1st May and today is 29th May, right? So what you can do is that if you are really interested in developing a strong base, particularly for ESIs, essays and interviews, etc., then you can watch these sessions, right? They're typically half an hour sessions. You can watch on a 2x speed or 1.5x speed, which will reduce the time that you invest. So these are my suggestions, right? I hope I have addressed some of your queries, and I'll meet you all again tomorrow and we will take my discussion ahead in unexplored directions. Thank you so much. All the very best. Jai Hind to all of you guys. Bye bye. Take care. Study hard.